Hi friends, my name is Rahul Jain. I'm a SEBI registered research analyst, and in this video we're going to talk about IT stocks because there is a lot going on in IT and there are two camps right now. One camp says that IT companies right now are golden opportunity because the valuations are really cheap. The other camp says that, you know what, IT companies are dying down a slow death, right? And therefore we keep away from Indian IT companies. What is my point of view? I'm going to run you through in the next 1 to 2 minutes. And more importantly, we're going to deep dive into few IT stocks so that you understand the nuances of Indian companies. And again, it's my point of view. You don't need to necessarily agree with me, but hear out my point of view because I'm going to back it by a lot of data points. And throughout the video, you are going to learn something new. With that, let me start with first point, which is where are the valuations for Nifty IT? So if you look at Nifty IT index, the current PE ratio is 21.5 and I'm recording this video on 4th of March 2026. Now, if you look at what these valuations actually mean over the last 5 years, so if I show you the 5 years average PE ratio of Nifty IT has been around 29.31, current is 21.53. So the data tells us that from a valuation perspective, yes, the Nifty IT PE is trading at much lower, much discounted value when you compare it with the last 5 years average. This is at the broad index level. What about the specific companies? So if I talk about, let's say, the leading company from an Indian IT perspective is TCS. If you look at the TCS's last 10 years, the PE ratio history, you will note that the median has been around 26.7 and right now it is trading at around, let's say, 18.3 when I'm recording this video, right? Now 18.3 PE last time TCS showed us was somewhere back in 2017. So you see 2017 here, it was slightly lower than 18, 17.5, here 17.3. In fact, here it went to 16.3 back in 2016. So the valuations that we are seeing right now, and if you compare this with the last 10 years, we are sort of gone back to 10 years, right? So it's a massive drop in the PE ratio for TCS. So the first camp that says that the valuations are really cheap, actually they are true if they're looking at from a valuations perspective. While the second camp, let's come to the second camp, which says that, you know what, Indian IT companies are dying down because of the AI, right? So if I talk about AI here for a minute and show you this data point, which is in February 2026, Anthropic released 6 AI tools you would have heard about in the news. Okay, they talked about replacing COBOL or rather upgrading COBOL based software using the Claude, but essentially they released 6 AI tools. And because of these 6 AI tools, the fear started bubbling up and multi-billion-dollar meltdown happened in Indian IT stocks. In fact, even the US IT software companies like Accenture, IBM, if you go and have a look at their data, you will see that massive drawdowns even there, right? Now the question is, what is my point of view? My point of view is very simple, that in the short term, anything can happen. Okay, next 1 month, 2 months, 3 months, anything can happen. The Nifty IT index may fall more. It is entirely possible. In short term, what drives the price? It's very simple. It's the sentiments, it's the fear or the greed, right? But when it comes to mid to long term, what really drives IT companies in my view are 3 factors. Number 1 is the fundamentals of the company. The last 5-10 years, not every IT company's fundamentals are same. You would agree with me, right, on that. Second point is their valuations. Okay, not every IT company's valuations are cheap. There are IT companies that are still trading, above 40p. I mean, they are there, the companies. And the third point is, out of the IT companies that we see right now, which are truly pivoting to AI, and we have to see their order pipeline, we have to see how much of their order pipeline is building through AI. So if you select these 3 parameters and look at individual IT stocks, it's entirely possible that you come up with a short list of, let's say, 5 or 3 or 10 stocks and say that, you know what, this shortlisted IT stocks, they're superior from a fundamental perspective. They're very good relatively from a valuations perspective. And thirdly, they're gradually pivoting to AI. You are not here to do IT investments for overnight. If you're into that camp, then please don't watch this video, right? If you're looking for, let's say, mid to long term, then yes, watch this video because I'm going to teach you how to go about looking at these 3 parameters by using some advanced filters that otherwise you're not going to find in news or on YouTube, hopefully. So if you're so far liking this video, request you to like this video and also let me know in the comments a simple thank you. While now I jumped into showing you how do we go about filtering IT companies based on these 3 parameters. So the first thing we're going to do is head to tickertape.in. Okay, this is my go-to tool whenever I have to compare various stocks on fundamentals valuations. In fact, I've been using as a pro member since 2022 and the results have been phenomenal for me personally. If you want to take their pro membership, they are currently running an exclusive offer of 45% discount on their annual plan as of now if you use my link and my code. With that, let me first go to screener here. Okay, first thing we're going to do is stocks here and start screening. Okay, you will see a bunch of filters already here. What we're going to do is get rid of all of them. Close price, P ratio, returns, all of that we're going to get rid of so that I want to start clean. Okay. Now you will see only few things here, which is sector, market cap, etc. First thing is to select IT stock. So how do we do that? We go into sectors and here you will see information technology. Click on that and then you will see 7 subsectors. So information technology is the sector and underneath this you will see subsectors. For example, technology, hardware. But we are not interested in hardware. What we are interested in IT services and consulting. We are also interested in software services and then application software. These 3 will cover broadly all the IT services companies like TCS, Infosys, etc. And that gives us 277 IT companies, okay, that have been marked as IT software services company. The second thing we will do now is we are going to look at the market cap, okay, second filter. So do you want to analyze all companies? Well, let's put a filter here. I would say let's go with all the companies that have at least 5,000 crores of market cap, because going below 5,000 could be really risky. Those are micro cap companies. If I do that 5,000, I bring to only 29 companies. So from 277, I have come to now 29. Now just a disclaimer that none of these stocks are recommendations here. We are not doing that. I'm going to simply teach you how to go about using parameters like fundamentals, valuations, and ultimately get to 5 to 7. I don't know how many stocks that are faring good relatively along those parameters, right? Now the third parameter we're going to use is something called as return on equity. So we're going to look at 5 years average return on equity. So here is 5 years average return on equity. Okay, let's add this one in, and what we need is any companies that have given me minimum 15% average return on equity, then I need to take those companies further ahead in the race. Otherwise, the companies have not given even 15% return on equity, then I'm not interested in that. As simple as that. Now this 15% could be, let's say 14%, 13%, but don't go below 12% is what I would say, because in India, the return on equity typically you would get in even at index level is around 12% as of now, right? So I'll go at around, let's say 15% here, and I get 27 companies that have delivered more than 15% return on equity in the last 5 years. The next thing what we need to look at is the average EPS growth rate also. So for this, another filter that I'm going to add is, let's say 5 year here. So 5 year historical EPS growth. There is a filter here that is telling you how the earnings per share of these companies have grown in the last 5 years if we take the average of that. Very important, because if a company's earnings per share are improving, then it tells me that the fundamentals are good. So ROE is a fundamental parameter. EPS growth is also a fundamental parameter. Now, how should we look at EPS growth? So if you look at IT companies, their EPS growth, earnings per share, has not been phenomenal, barring few companies. They've been around low single digit, like TCS 9.26%, Infosys 10.76%. So single low digit, right? So I'm happy to only remove those companies that have delivered negative EPS growth. Okay. So even if I say 0% se zyada, give me the 5 year historical EPS growth, I get 23 companies, and all these companies have delivered EPS growth which is positive. For example, companies like Tech Mahindra, right? I didn't want to filter it out. It's given me 5 year average ROE growth rate of 0.96, because 3-4 years back they were struggling big time. Okay, there have been some good turnaround in the last 8 to 10 quarters, so that's why I don't want to lose out on those companies. That's why I've gone very conservative here. 0% se zyada EPS growth rate in the last 5 years is good enough for me. The next fundamental parameter that I want to use is the 1 year forward EPS growth projection. Okay, so 1 year forward EPS growth here, as you can see, it's a pro filter. It's only available for pro members. So since I have access, I'm going to use it. What is this going to tell us? This is going to tell us the forecasted EPS growth in the next 1 year. And we are only interested in those companies where there is a good EPS growth projected for the next 1 year. These are not guaranteed EPS growth rates. These are projections, but we want to see what is the forecast about these EPS growth rates. So I'm going to just use that here as a filter. I'm not going to eliminate any companies based on 1 year forward EPS growth rate, because I want to show you something interesting, because we need to see the EPS growth rate for the future and the current valuations, right? That is the most important thing that we need to look at, right? So have a look at these companies. Their 1 year forward EPS growth rate is projected here. The next two parameters are valuation parameters. So three fundamental parameters we have used so far: ROE, EPS growth, and the EPS growth rate for the next 1 year. Now we're going to do two filters which are the valuation related. So what we're going to do here is we're going to say P premium versus subsector. Okay, again, this is a pro filter here. What is this going to do is it's going to compare the P of this company and the subsector's P and tell you whether the company is trading at a premium, which is higher P than the subsector, or is it trading at a discount which is lower than the subsector P. This is the most important thing when you are looking at valuations, relative valuations rather, right? So I'm going to click that and add that in my filters. Likewise, I'm also going to add another one which is PB premium, okay, which is price to book versus the subsector, and we want to see how many companies are trading at a discount versus how many companies are trading at a premium. Okay, both are pro features, and as I said, you need to have pro access if you want to do some stock level research. So think of investing in few good tools wherever you can find the information. I've been using ticker tape for a long number of years now, very happy with that. So what we're going to do here is now we have added P premium versus subsector, PB premium versus subsector. Okay, now have a look at, for example, companies like, let's say, TCS. Okay, what do you see? 1 year forward EPS growth rate is 7.74, but the premium from a P premium perspective, it is actually trading at a discount, minus 6.35, but from a PB perspective, it is still trading at a premium 69. Okay, now have a look at, for example, Wipro here. Okay, Wipro, for example, it is trading at a massive discount, both from a PE perspective and PB perspective, minus 24.26 and minus 57.13. But 1 year forward EPS growth rate is very low. It is 1.14. What you're able to see here quickly is the companies are trading at a deep discount, but at the same time, their EPS growth rate is not projected very high. That's why primarily they are trading at a discount. Now, there are two types of investors here. One is they will say that, you know what, we are growth style investors. We only want to invest in IT companies that are growth driven. So for them, the companies that are showing 1 year forward EPS very high, for example, like Persistent, okay, 34.64 is the 1 year forward EPS growth rate. LTI Mindtree also 18.95. Again, I'm not saying invest in that. I'm just going to tell you the growth mindset here, right? But these investors will have to pay premium, right? For example, PE premium is 36.13 in case of LTI Mindtree. 50.64 for Persistent Systems Limited. So if you fall under growth type of investor, then you will have to look at those companies where 1 year forward EPS growth is very high. You can see the list here. Okay, NetWeb, Coforge, Persistent, Tech Mahindra, LTI Mindtree, Zensar, Latent View, etc. Right? While on the other hand, there are value investors who will say that, you know what, I want to only look at those companies where the discount is going on in terms of PE and the heavy discount, but at the same time, 1 year EPS forward growth rate is decent. Okay, they are like value investors. So what I feel right now is that my point of view is that in IT right now, it is important that you stick to value. Value theme has been working fine right now because the overall sentiments of the markets are really bad because of geopolitical tension, what's going on in Iran, tariff situations, trade war. And right now, value theme has been working better than growth. Again, it's your individual call, but that's simply my point of view. So what I'm going to do is I'm going to look at only those companies that are trading at a discount from a PE perspective and also from a PB perspective. That brings us total 9 companies. Okay. Now, if you look at these 9 companies, one of them is showing me 1 year forward EPS growth rate as negative, right? Scient Limited. So what I'm going to do is I'm going to go back and remove anywhere the 1 year forward EPS growth rate is negative. So I'll say 0 to higher. Okay. I get 8 companies. So these 8 companies are definitely trading at a discount from a PE and from a PB perspective. You can see the data here, okay, how much discount they're trading at. And you can also see their 1 year forward EPS growth rate as well. Now, what you see on my screen is 8 companies that we have shortlisted using my method. Again, I'm not saying my method is the absolutely correct method. I have given you the view around growth versus value. And if you are trying to put all these companies in comments of this video, please don't do it. Because what happens is that people only read comments, they get only 10% of the story. They do not understand, I've explained growth here, I've explained value here. They're not looking at anything. So please do a favor that do not try to save others' time. Okay, that's what people say in comments that, you know what, thank you for saving our time. You have given us the list of 8 companies. Actually, it's not about saving the time. If you really want to save your time, then don't invest in equities if that's how your attitude is. And I'm sorry to be really harsh because I see those comments and it really hurts me that people are only looking at the name of the stocks. No, please try and learn about equity investing. And it is my method. It doesn't need to be correct, right? Watch other videos as well. I'm not saying that don't watch it, but please make sure that you're not putting all of these 8 companies in the comments. Humble request that don't do it, right? Now, what we want to do here is that you might say that, Rahul, you know what, out of these 8 companies, I want to only investigate further those companies which are large cap companies, because I don't like mid cap, I don't like small cap, they're very volatile. Absolutely fair. You can just filter them out by market cap here. Okay. So for example, highest market cap is Infosys, followed by Wipro, etc. You want to take bets in mid caps, then you have mid cap companies here. You want to take bets in the small cap, then this method has given you the small cap, mid cap and large cap. That's the beauty of it, right? But so far we have covered 2 parameters here. One, we have talked about fundamentals when we have looked at the valuations. Both we have covered. Now comes the most important point, which is the AI pivot. Out of these companies, now we have to study individually which companies are gradually moving towards AI. Look, none of these companies are going to overnight turn into an AI company, because let's face it and let's admit it honestly that our Indian IT companies have messed. Big time they've messed around, because they haven't really used AI. They haven't really built the true genuine capabilities of AI. They have been saying that, oh, I've got this AI framework, I've got this AI tool, but they are not the exact AI that the world is looking out for. Something like what Anthropic has released, where they're talking about, automatic upgrades to COBOL, etc. I don't know how true that would be. I mean, the time only will tell us. But the point is, we have to study these 8 companies from a AI angle perspective now. How to do that? You have to simply go and read each and every company's latest summaries about their sentiments, their quarterly results. I'll give you one example. Okay, I'm not going to cover all 8 here. We don't have that much of time. So let me pick up Sonata Software. Okay, I'm just going to go and click it in a new tab, and I'm going to show you what are the things that you need to look about when it comes to AI. So when you come to Sonata Software Limited here, you will see the sentiment analysis, which is the analysis that Ticker Tape has automatically done for you, right? Here now, if you go and you can read this entire detail here, but more importantly, read the growth drivers here. Okay, so if I click on growth drivers here, right? So I'm going to click and say see all here, and let's click on, let's say, growth drivers here. You will note that the company is strategically focusing on AI and modernizing the engineering, right? Now, specifically, if we look at the data points here, AI now constitutes 14% of Sonata's total order book. This to me is a good data to look at. How much of the order book of the company is coming through AI as of now? Okay, it's not going to be 90% or 80% or 70% for that matter. The companies have gradually started to get projects, win projects that are into AI domain. It also doesn't mean that the company is developing some out of the world AI features or technology. They might be doing some smaller implementations, but the point is that they are gradually winning the AI deals. That is what we need to look out for. So for example, here Sonata 14%. And also this is just a 14% of the total order book. But if you look, it is rising by 10% in the previous quarter. So quarter on quarter, their AI pipeline has grown up by around 10%. So not only they have built around 14% from their total order book into AI, but from previous quarter perspective, it has grown at around 10%, which is a healthy sign, right? Now you can also read other things here. For example, what have been their quarterly results? Large deal wins have been there or not? What's the revenue and profitability growth in the previous quarter? So their PAT is grown at around 21.4%. Do you think it is healthy? Yes, from an IT company's perspective, it is, in my view, very, very good, healthy rate, 21.4%, right? What is happening around their client base in the market share? You can read that, right? These are the things that you need to read, but at the same time, you also need to read the challenges here. So for example, what's happening to their BFSI sector performance? So apparently there has been a 60% year-on-year drop in revenues attributed with a single client. So I don't know how many of you have been following Sonata Software. This I've been following for a long time now, right? And they had one of their large client leaving them. Okay. And this happens in IT all the time. Right now, their revenues are getting hit because of that one company, one client leaving, right? These are the things you need to look at in terms of the negatives, because no company can give you perfect picture when you're investing in stocks, right? Some companies will have lesser risks. Some companies will have very, very high risk. What you need to do is go through this analysis, and thankfully Ticker Tape here has sort of summarized all of these things and given you headlines in terms of what are the challenges the company is facing and what are the growth drivers that the company is witnessing. Compare this for all the 8 stocks. So if I go back to our list here, you got the list of 8 companies. Your homework will now be to go into 8 companies detail, go through their sentimental analysis, because that is the most important thing. Of course, you are free to do some other analysis if you want to look at how much of the cash the company is sitting at. I haven't done that here, but typically all IT companies are cash rich. They have good cash sitting on their balance sheet. So if somebody is sitting at, I don't know, 100 crore versus 10,000 crore, it hardly really matters because they're not going to go down because of the cash situation, right? But hopefully in this video, you got the view of how I look at IT. Right now, if you ask me, the opportunity lies in the individual stocks. Okay. At index level, 5% up or down can happen anytime, right? That is given. That is volatility. That is not the performance. Performance is coming from the individual IT companies where the fundamentals have been good. The valuations are very, very good. And thirdly, they are gradually pivoting to AI. Go through these 8 companies, and if you find some good opportunities, that is your call. Do not take any of these companies as recommendations, and please, for God's sake, don't write the names of these 8 companies in the comments. You're not saving anybody's time. In fact, you might impact their decision making and they might incur losses because they just read the names of the 8 companies. Please don't do it. But more importantly, if you like this analysis, request you to hit the like button. Let me know in the comments a simple thank you. Consider becoming the pro member of Ticker Tape if you like this tool. 45% discount exclusively for using my link and my coupon code. You're not going to get it anywhere else. With that, I'm going to see you in my next video. Until then, keep rocking. Investment in security markets are subject to market risks. Read all the related documents carefully before investing.